Hello, it's been a long time since insurance policies were just about taking on your risk. Not only have there become more and more insurance products on the market to help you defray risk, but also there's these days the opportunity to garner a return from insurance policies as well. Now, to bring us up to speed on the current state of insurance, we're talking to Gabriel Tan from AIA, where you head a team of 100 consultants, including those who look after high net worth clients.
That's right.
So give us the latest then on where insurance is at. I mean, is it really just again about life insurance and car insurance, or what would you say is the cutting edge of the insurance business?
Well, I guess insurance is just like any other investment products. We still invest it in a good portfolio mix of equities and fixed incomes instrument. Except that lately there's been a lot of interest into this interest sensitive product like universal life for the high net worth segment. At the same time, the new generation, yes, they are looking more into the investment link products whereby they have more say, more control into where the funds are being invested in. So yes, there's a switch into that portfolio, but the basic core coverage of death, TPD, critical illnesses still remains the same.
And TPD is?
Total permanent disability, when a person suffer either some loss of use of parts of their bodies or the inability to earn any wages, compensation or profit.
Right. Now, in general, as you point out, you know, the basic core is still the same. Insurance is there to help you tide over difficult times. But at the same time, the products have also become much more sophisticated, to the extent where you now hear people say, oh no, the basic is best. So what sort of person ought you be to find the basic insurance policy where you're paying premiums, you're not getting any returns, more interesting than those where you are paying premiums, but there is a chance of some sort of annuity or similar payout at the end?
To answer that, I think we've got to get to the different types of products or life insurance products. Take away all the fanciful names and what have you, and you can subdivide them into 5 major categories. First, something we're very familiar with, the whole life policies. You pay whole life, you pay limited premium payment terms, but you are covered for till 100 years old. That's a whole life. Sure, you have term, which you just mentioned. Term policies give you coverage for a fixed period of time, no cash return, but if things happen, something happens to me, unfortunate things, I get paid.
Or your family gets paid.
Or your family gets paid if I pass away. Then there's endowment, or the consumer calls it savings plans. Well, these are people who want more savings element, but lesser coverage. That's the third type. Notwithstanding the medical insurance. Medical insurance, you have 5 different components inside there. You have those that take care of the hospital expenses, hospital income, critical illnesses, which we hear very often about, disability income, and lately long-term care. But the latest two that is getting very popular are the investment-linked policies, which I just mentioned, and the universal life. So if you take all the different insurance companies, all the different names away, these are the 5 different components. Right. Which is suitable for me? I think that's the consultant's job to do a proper analysis, gather the facts, and then we can determine which is more suitable for the customers.
I know this is a funny question to ask somebody in the insurance business, but would you concede that there are some insurance plans that you can do without? For example, it's seemingly not very popular in Singapore to take out contents insurance on your house. Is that because it's unnecessary, or people just don't know about it?
Interesting question, because from the financial planner's point of view, this is all the more important if let's say different segment, a different stage of life cycle. Say I'm a retiree, and contents now become very important. Why? Because if something happens, let's say a fire burns down my house and my contents are gone, I don't have the kind of income earning capability to replace the contents, to pay damages, and it's interesting because we think that if I retire, I don't need insurance anymore. But you're right, that awareness, because most Singaporeans feel that, well, if I pay for something and there's no return, nothing happens, why am I wasting the money? And it is all about education, and the importance of it lies with how consumers perceive the value that they pay for.
Okay, and how well trained are the insurance agents these days to be able to say, actually, sir, this is not a policy that you need at your stage in your life?
Right. I've been in the insurance industry for the last 23 years. I think it has surely come a long, long way. The good old days whereby we just get on the street and sell, vis-a-vis nowadays you have to, certification aside, I think the amount of trainings, the amount of requirements, the fact-finding requirements that a new consultant has to go through, I think they're doing a pretty fine job in gathering the data, analyzing it, and doing the right proposal. So we are not exactly there yet, but I'm sure we are almost there when it comes to planning.
What about this concern that people don't want to buy life insurance policies because it implies the unfortunate, inevitable, but unfortunate event of people passing away? Do you think in Asia people have gotten over those traditionally held beliefs?
Well, more so the new generation, they view it as, what are you doing with my money? How can I get the most of the money that I place with you? And that's why this swing towards investment-linked policy, because I'm going to put money with you every year, every month for X number of years, and I want to have control over what the money does. So when we look at insurance nowadays, beside the coverage protection portion of it, more and more they're asking, can you give me a passive income? Can the policies give me a certain returns, a certainty over a long period of time? Can I do capital appreciation target or goals with the money I give you? And I think the new scope, the new types of life insurance products can actually meet some of these aspirations of the consumers.
All right, my question that was more along the lines of whether people are actually happy to take out some form of life insurance products, whether the superstition of not wanting to plan for the inevitable but unfortunate event is there.
Fortunately, in Singapore, we have a government that is constantly educating the public, whether it's the hospitalization, whether the need to take care of family. It's a lot better than 20 over years ago when people are ignorant of the need for insurance. So yes, there are some people who are still a bit reluctant, but I think the bulk of the population is, they understand the importance. Now the question is the choice, the types that they should take. But they certainly do appreciate the works or what insurance can do for them.
All right, thank you very much. Gabriel Tan from AIA.